Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technologies PLTR stock. We're going to be going over the latest stock news, what analysts think of this stock, what's the future growth trajectory for this particular company, and if it's a good buying opportunity right now. For more Palantir stock videos, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about Palantir, and without further ado, let's get right into today's stories. So if you didn't know, Palantir Technologies is growing their overall workforce. Specifically, they are hiring new salespeople, which is anticipated to boost their overall sales and revenues in the years to come. And this is expected to double. So they are doubling the amount of sales and marketers in their company, and this is going to be reflected very nicely on their revenues and their future earnings reports. Palantir has also had a great success in the US commercial segment, which sported a 150% net dollar retention rate, which is fantastic news. Their commercial segment is going to be their primary source of revenue in the future, and right now around 40% of their revenues comes from their commercial segment, while 60% of their revenues comes from their government business. However, eventually in the future, those will actually flip places and switch spots, with their commercial segment being the primary revenue maker for this particular company, which will eventually lead them to profitability. So as Palantir continues to hire more salespeople, this is going to not only boost their government revenue as well as their commercial revenues, it's also going to be a good step toward profitability for the overall company. Now, right now, I want to talk about specifically a graph that's going to be on screen, and if you can't see the screen, don't worry, I will explain it to you, and that is their US commercial momentum, which is absolutely phenomenal. In quarter one of 2021, they experienced around a 72% growth rate year over year from quarter one of 2021 from quarter one of 2020, and that grew by around 72%. Then in the next quarter of quarter two of 2021, it increased by around 90%. And then in quarter three, we saw an increase of around 103%, followed by an increase of around 132% in quarter four of 2021. So their commercial business, particularly in the United States and overall, is scaling at an unprecedented rate, which means in the future, this not only is going to be their primary source of revenue and it's going to make the company profitable, it's also going to allow Palantir to be more competitive against other companies such as Snowflake. Now, Snowflake is a good company in and of its own, and other AI technology companies such as C3.ai are also good for their respected markets. However, I like Palantir because they combined big data analytics, artificial intelligence technologies, and government contracting all into a single company, and each one of those markets are absolutely very lucrative, and that offers Palantir a giant runway to expand because their total addressable market is absolutely gigantic. On top of this, their non-US commercial revenue growth is also scaling very well. So what we're looking at here, we just want the trend to be positive, and it started out at around 7%. It jumped up to around 14% in quarter two of 2021, and then in quarter three of 2021, they jumped by another 19%, then to end the year with an increase of around 22%. So it is scaling very nicely, it's consistently and constantly growing, and if they can actually keep up the CAGR, this is going to be phenomenal for the overall company, because they're starting to diversify outside of the United States, which is great news for investors because this is going to bring them more adjusted free cash flows and a better adjusted operating margin, which was already very impressive. For quarter four of 2021, they brought in around $124 million worth of adjusted operating income and around $104 million of adjusted free cash flows. And we're going to use these free cash flows to actually calculate a future price prediction for the PLTR stock using a DCF model and the LA Stevens model, which is going to take into consideration their current growth rate based on their free cash flows to determine what the stock price should be trading at right now. And I have done this in other videos with other assumptions, but when we do it this time, we're going to get a much more accurate representation because now we have full year 2021 numbers to work with. So by doing this, we're going to calculate the PLTR stock's fair value and the expected rate of return for investors from the stock's current stock price. So in step one, we're going to use the traditional DCF model, which is the discounted cash flow model. In step two, we're going to model their various accounts and their growth rates on top of their overall compounding annual growth rate for the revenues free cash flows over the next 10 years. So on screen now, you can see our assumptions. So over the next 12 months, Palantir is going to bring in around $2.2 billion worth of revenue, with an increase of potential free cash flow margin being around 40%, where the average diluted shares outstanding will be approximately 2 billion. Their free cash flow per share is going to be 44 cents per share, while the free free cash flow per share growth rate, we're going to put at 27%, while the terminal growth rate is 3%, and we're going to factor this out for their years of elevated growth for around 10 years, while using a discount rate of around 9.8%. And we're going to put that in the LA Stevens valuation model, and then we're going to press calculate. We're also going to fill in the stock's current price, which is around $11, but in this instance, we're going to use $10.75, and then we're going to press calculate, which is going to give us a present value of around $39.15, which means that investors have around 72% upside from the stock's current price right now. However, now we actually have to discount that based on the percentage change in shares outstanding, and once we do that, we're going to get a price target of around $33.19. So according to the model for the DCF model and the LA Stevens model, we have calculated a price target of approximately $33 for Palantir's intrinsic value, which is only $2 above what Morningstar actually says Palantir's intrinsic value is, and Morningstar actually thinks that Palantir is worth $31 per share right now. So jumping from a current stock price of approximately $11 to over $30 in the span of just 1 year is fantastic news. So if you can snag Palantir Technologies at or around $11 per share, that is going to be a fantastic long-term buying opportunity for you. However, if Palantir Technologies already makes up over 5% of your overall portfolio, and you have enough money allocated to the stock where it makes up 5% or more of your overall portfolio weight, you may just want to move on to another stock right now as to not overexpose yourself to a single company, which would be bad risk management. I also want to talk about how people gave Palantir flack for buying gold back in August of 2021, where they purchased around $50.7 million worth of physical gold bars. And they did this in reference to a Black Swan event. And if you didn't know, a Black Swan event is an event that is very detrimental for the overall company or stock market or even the economy in general that no one could have predicted. So it's not like Palantir predicted inflation or the fact that Russia was going to invade Ukraine. However, they had a feeling that something like this may happen, so they are hedging their bets by buying gold. This not only is a good hedge against future inflation, which is also happening right now, gold is also good to own in times of war. Now, personally, I am not a big fan of owning gold. However, Palantir, I thought, was very clever by buying gold before two Black Swan events happened, one of them being major inflation and the second being the war between Russia and Ukraine. Now, the reason this is actually a good thing is because although the stock is trading at around $11 per share, and that makes the market cap of the overall company have a valuation of around $22 billion, this is going to lower their overall price to sales ratio, which is good news. More good news is that on their balance sheet, their financials are extremely strong. They have around $2.3 billion worth of cash or short-term cash equivalents, and this liquidity is going to be used very wisely by their management, on top of Palantir having virtually no debt at all. So it's not like Palantir can use this $2.3 billion worth of cash or cash equivalents or liquidity on their balance sheet to pay off any debt because they don't have any. Instead, they are using this to invest into various SPAC companies, buying gold and hedging their bets against market volatility, which to me is pretty genius. And this just goes to show that the management of Palantir is looking far into the future, which is why I think Palantir is a fantastic long-term investment. But I want to talk about Palantir's profitability, which is really going to be the thing that makes or breaks this overall company. That Palantir Technologies has an ample amount of contracts, agreements, strategic partnerships, and alliances with top-tier companies. I'm talking about companies like AT&T, Amazon, IBM, Pacific Gas and Electric Company, Airbus, Scuderia Ferrari, Hyundai Heavy Industries, and Merck, just to name a few, but the list goes on and on. These are all top-tier companies that is eventually going to help Palantir achieve profitability, because as we see, Palantir is not losing customers, they are actually maintaining their current customer base while consistently landing new customers. And every year we've actually seen from their retention rate numbers that once they land a client, the client ends up spending more money over the term of contracts by continuously expanding and extending their contracts with Palantir Technologies. So this not only indicates that the current companies that are using Palantir's technology really like Palantir's products, but they're willing to do more business with Palantir even though their contract is about to end, and that is fantastic news, and this should make investors extremely bullish. Now, the two main things that are preventing preventing Palantir Technologies from becoming a profitable company on a GAAP basis, because technically they are profitable on a non-GAAP basis, but if we are using generally accepted accounting principles, they are not profitable yet. And the two main reasons for this is their stock-based compensation program and their investment-related expenses, but mainly due to their stock-based compensation plan. Luckily, the CEO Alex Karp made comments about their stock-based compensation program in the Q4 earnings call, where he basically said when he stops stock-based compensation, that is going to be the thing that pushes Palantir toward profitability. However, he's not concerned about Palantir's profitability at current levels right now, and he will pull that card later. We can already see the stock-based compensation improving because it has dropped by around 35% from over $1.4 billion worth of stock-based compensation in 2020 to only about $953 million in 2021, and this number is supposed to continuously lower as time goes on, thus pushing Palantir closer to profitability. And when Palantir eventually achieves profitability, most likely between 2024 and 2026, that is going to be fantastic news for investors. So, with Palantir's current stock price trading at around $11 per share, with an overall market cap of $22 billion, that means their PS ratio is very good, only at around 10. But ideally, we don't want a PS ratio in double digits, we would want the PS ratio in single digits. However, this is still a substantial improvement from well over a ratio of 20 for their PS multiple, which just signifies to us that Palantir is trading at a substantial discount. Not to mention the current geopolitical drama that's happening between Russia, the United States, and Ukraine, which is concerning the overall world. Many government agencies are going to flock to Palantir because Palantir has extremely secure data platforms that is going to prevent them from being hacked, which is something that Russia is known for doing. They are known for hacking their adversaries, and Palantir can prevent this, which means that many companies and governments are just going to be more intrigued for the products and services that Palantir offers them. So with a fair value of around $30, a current stock price around $11, profitability in sight on the horizon, and the current market environment is pointing to very secure companies such as Palantir Technologies, this is overall very good for the stock and company and could be a fantastic long-term play as long as Palantir doesn't already make up more than 5% of your overall portfolio. But I would love to hear your thoughts down below. Subscribe if you are new, smash that like button for more videos like this one, and I will see you in the next YT video.